Look, before you place your very first trade, before you connect your bank account, and definitely before you open up any of those shiny new apps, you really need to understand something. We're looking at a space where absolute fortunes are made, for sure, but we're also looking at an environment that is completely and totally unforgiving to the uninformed. Today's explainer is a cautionary tale. It's a hard look at the fatal cost of crypto illiteracy, because in this market, the mechanics of ruin are fascinating, but they are absolutely devastating if you don't even know they're there. Think about this quote for a second. Most people don't lose slowly, they lose fast. You see, we're so conditioned by traditional finance to think of losing money as this slow, gradual decline, right? Like a stock dips a few percent over a quarter, or a retirement account shrinks a little bit during a recession. But what we're explaining today operates on a completely different timeline. The sheer speed of destruction in these markets is exactly what catches newcomers completely off guard. So let's dive into the illusion of easy money, the hook and the hype. I want you to meet Jake. He's in his early 20s, just a regular guy. He didn't get into crypto to gamble away his savings. He just wanted to win. So it's late at night, he's scrolling on his phone, and the algorithm is just bombarding him. Bam, turn $100 into 10 grand. Bam, the next 100x gem. Bam, don't miss this rocket ship. It's this relentless feed of massive green profit candles and hyped up promises that are literally designed to bypass your logic and trigger pure FOMO. Jake's eyes widen as he scrolls. The seed is planted. But how exactly does all that hype translate into a total wipeout? Well, we're going to break down Jake's rapid descent into ruin through 4 fatal steps. First, trading blindly without any fundamental understanding. Second, placing blind trust in online influencers. Third, discovering the incredibly dangerous world of high leverage. And finally, the psychological trap of chasing losses. These aren't just minor mistakes, you guys. They are a perfectly engineered sequence for absolute financial destruction. Let's look at mistake number 1, zero knowledge. Jake opens up a trading app. The charts are moving insanely fast, just flashing green and red. He's honestly pretty confused, but he's running entirely on the adrenaline of what he just watched online. So without knowing what the project actually does, without understanding its real market value or the tokenomics, he just clicks buy. He isn't buying a financial asset. He's buying on hope, rather than executing a plan. The only thing he knows is that some guy on a screen told him it would go up. And then, boom, reality hits. Negative 18%. Jake freezes. The chart just drops right out from under him. And this brings us to mistake number 2. See, Jake entered this trade, and then another one, and then another, purely because YouTubers were screaming about it, and Discord alerts were blowing up his phone. Different coins, different massive promises, but the exact same result. Down 18%, down 30%. And here's the really dark truth that Jake failed to realize. Those people screaming in the videos, they weren't trading. They were promoting. They were hyping up a coin so they could sell off their own bags, literally using their loyal audience as exit liquidity. Now, this is where the story gets incredibly dark. We are officially entering the danger zone with mistake number 3, overleverage. Staring at his initial losses, Jake is desperate for a quick fix, and he discovers leverage trading on his app. Now, for those unaware, leverage basically allows you to borrow money from the exchange to multiply your buying power. It creates this wild illusion of massive instant gains. The app shows him all these multipliers, offering to let him trade with money he doesn't actually have. And his judgment, which is already clouded by the hype and the panic, just completely evaporates. 50x. Jake selects 50 times leverage and hits confirm. Now, to put this into perspective, at 50 times leverage, yes, you are amplifying your potential profits by 50, but you are also amplifying your risk by the exact same amount. At this massive multiplier, the asset only has to move against Jake by a microscopic 2% for his entire position to be completely wiped out. It's literally a tightrope walk over a financial abyss. He's putting everything on the line, just praying for a miracle bounce. And then the chart moves just slightly in the wrong direction. Liquidated. In one single moment, every single penny he put into that trade is gone. Not down by a percentage, just gone. The exchange automatically closes his position to cover the borrowed funds, and it happens in the blink of an eye. That flashing red text on a screen is absolute. There's no customer service to call here. There is no refund. One tiny market movement, and his money has been vaporized. Which leads us to the final nail in the coffin, mistake 4, ignoring risk. Jake is now staring at catastrophic losses. And instead of closing the app, stepping away, and just cutting his losses, the emotional downward spiral totally takes over. He tells himself, I'll recover, just one more trade. He abandons any semblance of risk management, no stop losses whatsoever. He frantically doubles down, taking whatever money he has left to chase the money he just lost. The chart keeps dropping, and he's no longer managing risk. He is just desperate. 1 a.m. The price alerts are going off relentlessly. 2:15 a.m. Jake is frantically pacing his room, just watching the numbers bleed out. 2:58 a.m. Total unadulterated panic. Empty coffee cans everywhere. You see, financial destruction in this space rarely drags out over some slow, painful bear market. It happens in a few sleep-deprived, absolutely suffocating hours in the middle of the night. And then everything finally slows down. The dust settles. Jake looks at his portfolio screen one last time. Starting balance, $2,000. Final balance, $127. The chaos is over, and it's just replaced by this cold, silent, really heavy reality. He thought he was an investor, right? He thought he was getting in on the ground floor of the future of finance. But the brutal truth is, he never actually was. And that brings us to the cold reality, the real warning of this explainer. Let's step away from Jake's story for a second, because we really need to cut through the noise and look at the undeniable laws of gravity in this market. No knowledge equals guessing. No strategy equals losing. And no risk management equals outright destruction. Crypto itself isn't the problem here, guys. The market is not some sentient enemy that's out to get you. It's entirely neutral. The true danger, the actual fatal flaw, is deciding to step into one of the most volatile, fast-paced financial environments in human history without taking the time to understand the mechanics of how it actually works. So I really want to leave you with a question to genuinely ask yourself before you open your phone to check a chart today. If you trade without knowledge, without discipline, and without a really strict plan, are you actually investing, or are you just gambling with the added illusion of sophisticated charts to make you feel better about it? Consider this your warning. This market is completely ruthless to the unprepared. You absolutely have to put in the time. You have to study the mechanics, understand the technology, and honestly, master your own psychology. Learn the game before the game teaches you a lesson you simply can't afford.